I'm Jay Taylor. I'm the editor of a newsletter called Jay Taylor's Gold, Energy, and Tech Stocks. I'm here backstage at the Metals Investor Forum in Toronto. It is June 11th, 2022, and I'm really pleased to be with Ryan King. He is Vice President of Corporate Development at Calibre Mining Corp. It's a company I've been following for a number of years, and one of those I'm very proud to say has really gone from exploration to producer and making lots of money. Imagine that. Ryan, thank you for joining me today.
Thanks, Jay. Always a pleasure to be here.
You know, you're Nicaragua and Nevada. And Nicaragua is when I first started following your company, and you're doing very well there with a hub and spokes business model. Well, just talk a little bit about that and,
Sure.
and how you're doing there and what sort of projections, guidance you might have for the.
Yeah, you bet. No problem. And again, thanks for taking the time, Jay, to interview us, because if we take a look at Calibre over the last number of years, Calibre initially acquired assets in Nicaragua back in 2010.
Yeah.
We were a prospect generator, right? We had brought in a number of parties, IM Gold, Centerra, and others, and that was working and advancing projects. But this team also was the founders of New Market Gold. And New Market, we discovered a very high-grade operating mine, and it was in operation. We then merged that company with Kirkland Lake Gold to create a better financial product, right? So the team then said, okay, what else can we do with Calibre? It's advancing as an exploration company. What could we do? So we restructured the company in 2018, again looking for production. So in 2019, we raised $100 million. We acquired the El Limon, La Libertad, and surrounding concessions in Nicaragua from B2 Gold.
B2 Gold.
And really, we partnered with them because B2 Gold, I think, really recognized the opportunity. Calibre, a focused team on the assets, focusing 100% on those assets, and they kept an equity stake. So they are a 25% shareholder, and they've seen the benefit of what we've done. So Limon and Libertad were separate operations, right? Limon, smaller mill. Libertad, a much larger mill. Limon has a bigger resource base.
Right.
Libertad was actually heading towards closure. So 2020, Libertad was to go into closure. Government knew it. The communities knew it. B2 Gold had disclosed that it was heading towards closure. So that was a large 2.2 million ton per annum mill. Fortunately, Calibre has got a very experienced chief executive officer named Darren Hall.
Yes.
And Darren worked for Newmont for 30 years. And his role was to travel around the globe, looking at Newmont's operations and see how he could optimize them. Look at them from a different perspective, strategically and critically think, what else can we do? And all of the operations he worked at, he worked in Nevada, Peru, Australia, Indonesia, all of those assets, he had a positive impact on those operations. To give you an example, he got into Peru with Yanacocha. It was producing 50,000 ounces a year when he got there. When he left, it was producing over 1.5 million ounces a year.
Yeah.
So what Darren saw here was an opportunity where maybe we could use the good infrastructure in country, paved highways, put some of the Limon material in a truck and haul it over to Libertad for processing,
Higher grade
rather than building out a larger mill and $100 million of additional capital at Limon. So we started that in 2020. And remember, we thought we were going to be producing between 50 and 70,000 ounces a year. 2020, we produced 136,000 ounces of gold, utilizing that installed capacity at Libertad. 2021, we produced 182,000 ounces of gold. Now, along the way, we've also brought in our Pavon project, which when we acquired the assets, there was no 43-101 resource on it. We actually took it and said, well, let's see what we can do there. And we knew that there was some social issues in the past with B2 Gold in the surrounding area, but Darren brought in, met some of the community members, brought them over to Libertad, showed them what modern mining was like, and we went through the permitting process for that. Shallow, high-grade open pit, so about 300,000 ounces at 5 grams per ton gold. So we have, within 12 months, we had permitted our Pavon Norte open pit. And then within 18 months, we had actually started mining and hauling that material to the Libertad mill.
Wow.
right?
And you had all that excess capacity at Libertad.
Correct,
Yeah.
correct. So this hub and spoke strategy has been working very well. We've got a lot of infrastructure in place now, a large ground transportation management program, but good paved highways there. Our trucks are a drop in the bucket of the trucks on the road. You know, this is their main artery for transporting materials around the country. There's no rail, it's all on roads,
road, yeah.
right? So this has been working very well for us. And at the same time, when we acquired these assets in 2019, there's about 270,000 ounces in reserves. Today, after we've produced 350,000 ounces, we've got 1 million ounces of reserves at 4.6 grams per ton gold, the highest grade it's ever been. And yet this year we'll probably use 50% of the Libertad facility. So the opportunity
It's
for
a
us,
lot of upside there.
there's a lot of potential and low cost, right? For us to discover, permit, and develop a new satellite pit, very high return on invested capital because we've got the facility and we've demonstrated that we can haul that material safely, responsibly, and actually look to employ a broader group within the country, right? Bring on new stakeholders, and it's been working quite well for us. We've been investing heavily in exploration there as well.
Yeah. And you've done well by the people there too. As I recall, when COVID first came out, you treated the people very well and kept them on the payroll and
Yes.
did what you needed to do to keep good relations, which is very important in a country like Nicaragua. I'm sure your market cap isn't what maybe some of your peers are not as good. And I'm wondering to what extent there's still that perception that maybe Nicaragua, the country, risks. But you've been doing, B2 did well, and you're doing even better.
Yeah.
Maybe talk just briefly about.
Well, there's no doubt. I mean, we've seen the headline news coming out of the country. But our mantra is we're friends with everyone and aligned with no one. So whenever we're working within the country, we make sure we act like owners, engage all of our stakeholders, right? Transparent communication, following national laws and international codes of conduct in everything we do. And, you know, I'll give you an example. I think over the last couple of years, we've had public consultations that have brought out more than almost 1,000 people in different areas, right? We've had permits now awarded for tailings facilities. We've had permits for open pit extensions. We've had permits for exploration concessions, and new satellite deposits have been approved. So we believe because of the really good work our team has been doing on the ground, employing locally, I think the number is over 95% of our employees in country. And actually, when you look at the communities, it's over 80% of local community jobs that are created from building these assets. So, you know, with the cash flow, we're reinvesting back into the communities. We're reinvesting back into local community infrastructure. We're reinvesting back into the assets so that we can build out mine life and have a sustainable business.
Right. Let's say you're doing obviously very well. With just limited amount of time, I have to ask you about Nevada. You just made an acquisition that's giving you production now in Nevada. Talk to us about that.
Well, really exciting from our perspective opportunity. You know, this was Fiore Gold.
Yeah.
And we announced that in the fourth quarter of last year. And what we saw with Fiore is it had production with upside in one of the best mining jurisdictions in the world, right?
Sure.
Nevada. Now, you know, since taking over the assets, we'll say that the Pan operation is a smaller heap leach mine, 40 to 50,000 ounces a year of production. But what we see as the opportunity there is, again, investment back into that asset. Now, Fiore has done a very good job. Fiscally responsible, didn't take on debt, didn't issue more shares, but through their operating cash flow, they reinvested back into the business. But a small amount of operating cash flow, therefore limited investment was able to go back into the business. So you look at Pan, for example, over the last 4 years, there was only about $1 million to $1.5 million invested back into drilling in the operating asset. This year, we're going to do 50,000 meters of drilling at Pan alone, almost a $9 million budget on Pan. So a lot of drilling in and around the resource. And we've already put out some great results, better than reserve grade on average of some of the results we've been putting out. So we see the opportunity to extend mine life, make new discoveries on Pan. And then Gold Rock, 15 kilometers away, is a federally approved project, right, that could potentially double our production in Nevada. So we're now working through the technical studies, the state permitting. We'll have an update on Gold Rock in the next couple of weeks in terms of our timeline. We've been working on some metallurgy work to see what the recoveries could be. But also, once we understand all of that, then it will be stepping out along strike, because the potential is vast. I mean, right now, we've got about 500,000 ounces in resource, but we think there's a really good potential along the whole structure, which is 15 kilometers long.
Wow.
Yeah, so very exciting opportunity for us in Nevada, which now has a diversified portfolio within the company. And we think there's a tremendous opportunity given where we're trading at in terms of our value versus our peers.
Yeah. Well, so wrapping up, could you give us an idea? I think you've published guidance for both countries. Could you just wrap up with?
So this year, we've guided that we'll produce 220 to 235,000 ounces. And our all-in sustaining costs will be $1,200 to $1,275. Nicaragua, I think we've guided 1,100 to 1,200, which is the lion's share of our production, right? Probably 80% of our production coming out of Nicaragua. So we're generating some very good operating cash flow to reinvest back into the business, which affords us to spend this year. We're guiding $40 to $42 million on exploration. So our planned objective this year is 170,000 meters of drilling, pretty much split evenly between Nicaragua and Nevada. But you really have to reinvest back into the assets. Not only does this have the opportunity to extend mine life, but make new discoveries, which has really generally a positive impact on share price performance.
Right, and you're doing this with internally generated funds. Cash flow. You're making money. I don't know your earnings. You had good earnings last year. You had good earnings first quarter of this year.
Correct.
Doing extremely well.
Yeah, I mean, we're sitting on about $80 million in cash, no debt. We're unhedged, self-funding all of our growth and all of our exploration and adding cash to the balance sheet.
Yes, what I like about your story is you're not, I mostly follow exploration stories, but when you get a company that can produce and explore at the same time, you have both those skill sets and pull it together. It's a win for investors. I think especially, I believe that you're not really valued at the level that your peers, many of your peers, so.
We trade at probably a 40% discount to our peers on average.
On average.
And these are peers that range in various jurisdictions around the planet. So I'm not just cherry picking one or two, but I'm talking about 15 different peers, right? So I think we have a good representation of our peers. And I think it presents a really compelling value opportunity just as we're trading now at these levels with $1,850 gold. It's a fantastic place for us to be. Not our share price, but the business is doing very well.
The margins are excellent.
Yes.
Ryan, we have to wrap it up. Thank you very much.
Thanks, Jay. Appreciate the time.